Still a great jingle.
I don't know that I can ever change it.
Not now. Can't change what's not broken.
You're right.
Yeah.
People say it gets stuck in their head.
Yeah.
Then every episode starts with a comment about the song. So now it's almost tradition. Now we just have to talk about it.
You have to play it.
Mm-hmm.
Yeah.
And my brother, who made this, I don't think has listened to one episode.
He's like, he's probably even annoyed when you talk about real estate.
Yes.
Yes.
He has been since I started.
Yeah.
When I started in real estate, I was still working with the family company. So I was still working with him.
Yeah.
We were out laying sod, but my phone would be going off like crazy. So I'd have to stop the whole operation. And he'd be like, "Oh, real estate, huh? Real estate?
Yep.
Are you doing real estate?"
Uh-huh.
So.
Or then you'll have the people too where you'll start talking about work and they'll be like, "Is there ever a happy moment? Are you just, it's just like all we do is kind of bitch about the things."
Well, hey, I've got my good friend Natalie Dodson back from Illinois National Bank. Yeah. Thanks for coming back on.
Yes.
Different room.
Yeah.
Different setup.
It. Yeah.
More bright lights.
Yes. I love it.
Try not to. I had it. We record out of my basement. My other two podcasts out of my basement, and I had a setup down there. And Amanda came down, my wife, and she's like, "Oh my, how do you do that?"
Well, women,
it's blinding.
Typically, don't want all the flaws accented.
I'll edit all those out in post. Don't worry.
Perfect. Thank you.
Before we get going, something I want to talk about is coming up February 5th. And INB is actually the sponsor, but it's the Mixers with Affiliates.
Yes.
You familiar with this?
Well, it used to be the Wine Down.
Yep.
Yeah. Love it. They changed it, mixed it up a little bit. I mean, no pun intended.
Yeah.
Yeah. So it looks good. I like the change a little bit.
I'm excited. And I'm on this committee.
Oh,
I'm
nice.
on the affiliates committee. And my friend Diana Eldridge is heading up that committee. And she's going to come on, actually, I think the day before this event.
Oh, good.
And we're going to really talk about it. But we're hoping for some really good
a different turnout
attendance this year. So
perfect.
It's going to be super fun at the car building. And it used to be a wine tasting event.
Correct. Yes.
Now there's still going to be wine there.
Yeah.
As well as other cocktails, some prizes, some giveaway stuff, some food.
Knock on wood for good weather.
Yeah.
Yes.
Yeah.
Yeah.
But it's February 5th from 4 to 6 p.m.
Hope to see everyone.
Yeah. Everyone needs to be there.
Yes. I like the change. We did. We were just talking about it yesterday.
After this year, I want them to reevaluate and say, we might need to get a bigger facility.
Maybe.
I don't know. We can't house all these realtors.
I mean, even when it was the Wine Down and they felt like we didn't have a good attendance, it was kind of, you could get a little stuffy down there somewhat.
Yeah.
So, yeah.
So,
it is nice that the car building gets used. I agree. But
yes.
Yeah.
So anyhow, I hope to see everybody there.
Yes. We do too.
I've been tasked to talk about it.
Perfect.
On every episode leading up, and I was like, gladly. I will gladly talk about it.
Yes.
But I've got you here now, and let's. I think we have to talk about. I would say the most important thing.
Yeah.
Is what did you think about the finale of Stranger Things?
I don't know. Do you think it's done? That's the big thing. I don't know.
I think it is.
I know.
I think it's done.
I do too. And the only reason I think it is because of what's going on in their lives outside of the episodes.
I mean,
like the characters are moving in their own direction in their own personal lives.
Right.
Yes.
And it's like, we've got 30-year-old high school seniors here.
Yes.
Maybe.
But a lot of episodes have done that. I mean,
yeah.
We grew up with Saved by the Bell and pretty sure they were in there.
Yeah. That was, I think the main thing is we're not ready for it to be done.
I know. It was good. It was good. It was good. You got to switch it up. What should we watch next?
I just started watching Pluribus.
Okay. I'll add it to my list. No.
It's on Apple.
Oh, dang it. I just have the Netflix, Hulu, Amazon thing.
There are ways.
Okay. Okay. I'll talk to you later.
There are ways.
Off unrecorded. Yeah.
But it's a crazy premise. It's by the guy who made Breaking Bad.
Oh, okay.
And did you watch that?
A little bit of that.
Better Call Saul.
Okay.
Did you watch that? Okay.
Yes.
It's got the lady from Better Call Saul as the star of it.
Okay.
It's crazy. It's a whole premise where an alien like an alien virus. Was that your phone?
Yes. Sorry. God. Number one. Are you so mad? You're like, God, Natalie.
You're the first guest
like
of the new
5
year.
year.
Yeah. But an alien virus turns the entire human population into like this hive mind.
Okay.
But they're very friendly and helpful, except for like 10 people.
Okay.
Who it didn't work on.
Oh, okay.
And it's
so they're going to turn against everybody and
something. I don't know. I'm only a few episodes in, but it's super interesting.
I always need something new to watch.
That's what I'm into now.
Okay.
That and Landman.
Oh, of course. I'm watching that. Yes.
Okay. So we are here to talk about mortgage stuff.
Ugh.
Or whatever.
No.
Right.
Yes.
Yeah. Ugh. You can't say that.
I know. I'm teasing. No.
And I had you on before, and we did kind of like a whole thing. You know, how'd you get into the business and all that. I get to know Natalie.
Yeah.
So if anybody wants to go back and listen to that, I encourage you to. It was a great episode, even though I know you have not listened to it.
No, I will not. I cannot. I loved every single one, but that one, probably because I don't want to listen to my voice. But
So what do you do when your TV commercial comes on? Run out of the room?
Yes. Time to get a refill, make popcorn, do all the things.
That's all right. You do a great job. And so I like having you on because you're comfortable and you can talk. Me. So
yeah.
Looking back to 2025.
Yes.
I guess anything like stand out that you saw, anything to reflect back on a little bit?
I mean, I think the big elephant in the room has always been, will rates drop? You know, we got really spoiled. I think COVID has started this, ever since COVID, we've seen different trends with the market, right?
Yeah.
COVID set this trend with asking prices, inventory, and of course, rates. We got those amazing low rates that, in my opinion, we'll never see again in my life. Like,
fingers crossed.
I know.
It's too low. It was too low.
I think so. And so it set this precedent, and then like now we just kind of, but then they got really high. So then people are like, and we could have all swore as loan officers, well, we're being told this, and there's predictions of this. First it was before election, then it was right after, and then market and just different things. And here we are, still kind of the same. And yeah.
That's got to be so tough for you, because I know I get that question a lot. Yeah. What are rates going to do?
I know.
And I don't know what rates are going to do, but you've got to get that way more than I do.
Yes. Well, and the news doesn't help, because sometimes when the feds drop the rates, quote unquote, or advertise that they've dropped the rates or considered it, they don't actually drop.
Right.
Our rates are not affected at all. What happens, you know, or what you hear about doesn't directly reflect, you know, so.
And don't you guys a little bit like in advance, like knowing that a small drop is coming, you guys, I mean, doesn't that happen before it actually happens a little bit? So then when people see the headline of it just dropped, and then they're like, ooh, what can I get my, and then it's like, well, we already adjusted for that.
It's almost like the feds are gearing up for what they're about to announce. So we'll actually kind of see the drop prior. We tend to see the market reflect itself prior to the feds meeting. Then the day of the feds meeting, they'll announce whether they're going to drop or not. Well, that immediately makes other officials be like, well, oh no, now my unemployment predictions are incorrect for 2026. Now my, GDP is incorrect for 2026. All the forecasts then change. The market goes wonky because of all these forecasts changing. And then the rates get worse that day. But then they announce it, and then we get the phone calls, and then we have to explain that. And
it's so much.
Yeah.
It's so much to keep track of. And it's like, I always, I try to have answers to everything the best that I can.
Of course.
But I will, a lot of times, I've got a line that I use with my clients is, that is a lender question.
Yeah.
That's not a realtor question.
And
Call your loan officer, please.
We do always have a way to explain it. It's just a matter of if the news could report it accurately. It would just be more beneficial to everyone. So they don't think, one, we're lying or pulling their chain, whatever the case may be. We promise we want rates to be just as low as you want them, to help with payment, to just be factual, whatever the news may be, but they're not typically. So yes.
About where are we right now?
I think today they opened around 6.25 ish. Actually way better than last week, because of course They kind of fluctuate over the holidays. Then we went straight into Venezuela, which then changes like oil forecast predictions, whatever. Every little thing reflects somebody's prediction of what something should have been.
Right.
Yes.
Okay. So, I mean, I think we're still just too fresh from the COVID rates where people are seeing low sixes.
Yeah.
And not appreciating that historically, this is not bad.
This is great. It's amazing.
Right?
And ask my people that bought in the sevens. I mean, they're
right.
Yes. No, I mean, I am refinancing people that bought through that couple year period where it really skyrocketed after our 2, 3, 4% rates.
What was the highest that you saw since COVID?
Easily 7.875. I mean, we saw high sevens.
Yeah.
Absolutely.
Right up there close to 8.
Yes. And they probably won that house with 50 other offers and paid 40 over asking.
It's crazy. That's the thing is even when that was happening, and I don't know if that was just our market and this bubble that we live in.
Yeah.
Even when the rates got up there in the mid to high sevens, I mean, we were still getting multiple offers.
Yes.
And not just cash.
Right.
Way over asking.
Yes.
I mean, and so we were all kind of scratching our head, and we would have a general conversation with somebody because anytime somebody knows you're a realtor, they want to talk about everything. They're like, so these rates got to be hurting you, right?
Yeah.
And we're kind of like, I mean,
no,
I don't know.
And I have my theory on that. Before we get off the subject of rates and that bubble that we live in, just so everyone knows, feds meet every month, obviously.
Sure.
They meet again in January, which then they will announce the Fed chairman leaving. But whoever the Fed chairman is will not take over till May or June. The next drop is predicted. We're only predicted maybe 2 considerations throughout 2026 is what it changes all the time. Every Fed meeting, it changes.
Nobody's holding you to anything
so
you say here. Don't worry.
Feds are maybe thinking 2 different throughout 2026. New Fed chairman announced at the next Fed meeting, I believe, would take over April-May timeframe. I'm thinking May. I think May is the accurate date of that. The new Fed chairman taking over.
Okay.
Yes.
What would happen theoretically? Do you think if tomorrow rates dropped 1%? What would that do to our market? Like if all of a sudden we're locking in low 5s.
I actually think I would see a refi boom before we'd see too big of a purchase boom because inventory is inventory.
Right.
People still have to get ready to sell. They have to think about it. They stew on it.
Yes. Don't I know it?
Yeah. I mean, they could say, you know what, now I'm ready to move. But then what if the house isn't available?
Right.
Yeah. Yes.
And isn't that's kind of what we saw when they got so low.
Yeah.
And this is what I talk with people. When I stand up for the real estate industry on like social media to people who don't have a great understanding. They're like, well, you realtors just, you elevate all the prices. Like we get blamed.
No.
For the price, and then I have to go back and say, hey, okay, timeline of what happened.
Yeah.
Rates went way down to like 2.
Yes.
And everybody refinanced their house.
Yep.
And then we didn't have anything to sell. Well, that was the problem, though, is people who normally, they were like, oh, well, I could get into this market, this super competitive market, because 2%, everybody comes out of the woodwork. Everybody who's on the fence about buying leaps off the fence.
Yes.
Right? Now we're ready to buy. So we saw, as realtors, an influx of buyers.
Correct.
But then what we had was this market where there were buyers everywhere. And then as a seller, you're going, well, I could sell my house, but then I have to get into that market with these crazy buyers and pay way over asking, or I could refinance the house that I'm in.
Yes.
And just not have to compete with anybody and get a brand new great rate on my house. So then we lost a bunch of inventory.
Yes.
And then supply and demand, a bunch of buyers, no houses to sell.
Yes.
And so that's how I try to explain it. At least that was my perception of what I saw.
And then I also think that the people that bought in the high 7s were the ones that no longer had to compete as much, but really were still competing, which is crazy.
They were still competing.
Yes, but maybe not with 50 offers, maybe, but they finally had the opportunity to purchase.
Yeah.
They finally had that opportunity to go out and get something without competing with so many and different things.
And a lot of those people that were buying in the 7s had been looking
since the 2s.
Mm-hmm.
Yep. Lost out to cash. Man, where is all this cash? I'm like, oh my gosh.
Where is it coming from?
I don't know. But there was crazy going on,
Yeah.
Parents buying houses from kids just so they could be a non-contingent offer and lots of different unique situations.
People were getting creative.
Very creative. Yes.
Yeah. And
yes.
so
we've seen it all at this point.
Yeah.
And then COVID prices on building material, like especially for pools.
Yeah.
Like I would say the biggest over asking I had was a house with a pool. And that's probably because they knew that, well, of course I'm going to offer 50 over asking for this pool because it cost me 100 to install or something.
Yeah.
Depending on the situation, so.
And I know I've got people looking for pool houses.
Yeah.
And it's tough. It's
competitive.
And they go quick.
Yeah.
And the only blame that I put on realtors for potentially inflating home prices is not on the listing side. It's on the buyer side. Because I felt like there were a lot of times where, I mean, not every realtor, but there were realtors who would maybe encourage their buyer to ridiculously overspend in order to get a house. And then all of a sudden you have a neighborhood that's maybe $500 or $500,000 where all the comps are. And then there's one sale that's spiked way up at like, 600. And then that throws everything off because now everybody's like, well, look at that house. I'm going to list mine. And now that's the new comp and that's the new standard.
Yeah. When
it's like, you probably could have told them, hey, that's way too much to pay for this house.
And then you circle back around and then they list it and then now you have to, yes,
right.
I know. Yeah.
And to me, that caused a lot of, when you would get 1 or 2 sales in an area that don't support that number, but they'd come in either cash magically or they would put a 100% appraisal gap on there. So it didn't matter. And then.
But you have to understand too, don't put a lot of blame on you guys, on yourselves, as realtors, because we are all adults. We should be smart enough to know what we can and can't afford and what we can and can't do. I mean, just like I'd talk to my buyers at that time when they'd call and say, I'm looking at this house, it's listed for $250. I was looking at a $350. I mean, I immediately just upped it real quick and look to see what their max pre-approval and different things were because I was like, it's not going for asking.
Right. I
said, you should really be prepared. And I would go over different payment levels with them and different things. And as an adult, I would think that they would be smart enough to know. Yeah, I don't know. I don't know.
Yeah,
to an extent.
And there is, I mean, you're right. You're 100% right.
Giving too much credit, I guess.
And some people, some people no. And it's, for us who deal with this stuff every day, it makes a lot more sense. For other people, it's just, I mean, they're fully functioning and maybe they're super knowledgeable in what they do, but they get into this situation.
Yeah.
And they really need guided through it.
I agree. And that is our job. You're right. Very right.
Do you think more people have concerns about the interest rate they're locking in at or what their monthly payment's going to be?
Monthly payment.
Right?
Yes. Always. Good. Always monthly payment.
Good.
Yeah. I think they actually don't even realize how little the rate can affect the monthly payment. Like they're like, well, last week it was 6% and this week it's 6.25%. And I'd be like, that's a $20, or whatever the case may be. It might be a little bit more. Of course, every price bracket is different, but it's not like detrimental. Like people even refinancing with me where it's finally dropped a full point. So it makes sense on the 30-year to refi. I mean, we're saving $107, $200, so yeah. So it's really, if we can get their monthly payment to where they feel comfortable with their budget, everything is about their monthly expenses. Yes.
That is so important. I always tell my buyers when they come to me with their pre-approval.
Yeah.
And especially if we haven't talked ahead of time, right?
Right.
If they just, here's a pre-approval like, well, hey, I can buy up to $350. And I go, okay,
What's the payment look like?
Yeah. Do you know what your payment's? Mom, you should ask.
Yes.
Ask that question.
Definitely. I hope they're always going over that or asking the questions they feel like they don't know. And Realtor.com, Zillow.com, all of our favorite websites are still just quoting a lot of times principal and interest.
Yes.
And even though they've upped some of the websites to include taxes and insurance, remember they are taking a nationwide average. Illinois is so much higher. Those websites are using like a 1% for taxes.
Right.
It's a huge difference. Like I had a lady call me and go, well, Zillow's telling me this and it says it's including taxes and insurance. And I said, maybe if you lived in Georgia or Alabama, but in Illinois, those taxes are $300 a month off, or.
That's why I always just feel better if I tell them, go talk to Natalie.
Yeah.
And get an idea of what we're going to be paying.
And that is one of the easiest things that a loan officer can do.
Sure.
A payment within seconds. It's
right.
so easy. Yeah.
And so that's why because I'm like, well, I've got this mortgage calculator. And don't do that. Just go talk to Natalie.
Yeah.
Everybody has, there are certain variables with everything and it's very specific. Just go, because you might be off by $50 to $100 per month, which doesn't sound like a lot. But
it's a lot to that person.
Yeah.
Every person could be a huge, huge difference. That's why here recently our biggest thing with people is, and any loan officer you talk to, especially at IMB, will tell you, probably even just a year or two ago, we were quoting, let's say a $200,000 house. We might quote, on an estimated payment, $150 for homeowners.
Yeah.
I mean, we're probably quoting $250 now on pre-approvals. Homeowners insurance, even if you have the same agent around the same priced house and you're getting quoted, I bet your policy would even be higher if you put a new one in place compared to where it's at right now.
Yeah.
And I feel bad for the insurance agents. And I also especially even State Farm came out first to let everybody know that their premiums were going up. So everyone hurried up and tried to requote and get out of state. Well, they would go to these other companies and they were also just as high or higher.
Sure.
So they just came out and said it first on the news. But this insurance nationwide has also went up. So you live in Illinois where insurance and taxes are a huge thing. And to call your loan officer and just get an estimated payment is a big deal. Yeah.
It is.
Yeah.
And I always tell people too, your payment right now, when you buy your house, more than likely is the lowest it's ever going to be.
Yeah.
Yes. Because your taxes and insurance are likely going to increase.
Little by little.
By little, moving forward over the years.
Yes.
So if that number is all you can afford, if you're like, my house payment has to be $1,800 a month and not a penny more.
Yes.
Then I say, let's find you $1,500 a month.
Yes.
Then let's get you some cushion, because over the years you're going to hit
Yeah.
1,800. If you start at 1,800 in a few years, it's going to be more than that.
Well, and in our market, we always say, with the state of Illinois or Social Security people or whatever, you're going to get your 3% raise, but that will cover just your standard inflation or your payment on your mortgage going up or different things. So, I do feel like they will continue to make more to help offset that a little bit. But again, this last year, it could be worse, where you have a governor raising your taxes again after he just raised them, or insurance that probably wasn't expected for a lot of people.
Oof.
Who would have thought we got that many storms even in central Illinois?
Yeah.
But it really was a nationwide thing with hurricanes and fires literally from coast to coast all the way to the Midwest. Yeah. We've had natural disasters.
Yeah.
So, yeah.
And then, that separate, but still, we're talking about budgeting. Health insurance costs have gone too.
For you guys, I know I've heard for self-employed people, especially, you guys are really struggling with that. That sucks. Yeah.
And so it's kind of like,
that's why monthly payment. It all goes back to monthly payment.
Exactly.
Everybody's budget is huge. That's their biggest thing.
Because this is going to be more than likely your biggest payment every month.
Yeah.
So.
Yeah. Unless health insurance. Yes.
Yeah. Well, right.
Yeah.
Yikes.
Oh, that is yikes. Yeah.
Yes. So for 2026.
Yeah.
What are we hoping to see? What are we?
I really think everyone should really get comfortable with this 6%-ish, 6.5%-ish rate. I really do. As loan officers, we talk about it all the time. And like you said, even the 10-year average, 5% obviously would be amazing, but I really don't know if we're going to see lower than that 30-year. I just think that is a great solid rate. It's still the average for the last decade. I really think that we would be very, very blessed to see that rate again, but get comfortable with where we're at right now.
Sure.
I hate to say that because, of course, I put my foot in my mouth because I'm sure I was hoping that they would be lower already. And then, but I also think that our inventory, well, the real estate group is obviously a true, it proves that, we're a unique market and how we sustain businesses, which include homes. But with where we live, we're already seeing the bubble crash in certain areas. I lend in all 50 states. I've told you that before.
Yes.
I've had people buy second homes in Florida. Value's already down $50,000 this year trying to refinance. We already can't refinance a couple years after buying because that market is just being hit flood insurance. They're even getting hit harder than us. But our market has always kind of stayed a little steady. We have a fabulous medical community. State of Illinois contributes to that. We have your places like LRS, Brant, our National Guard and Air Base. We just have that really steady community. We have amazing people moving in for SIU School of Medicine. We just kind of our housing market has always been kind of blessed that way.
Yeah.
Yes. We might not see the over asking and all the things, but I just really feel like we've always been steady, and I knock on wood. I really hope that continues for us.
Yeah. You and me both.
Yes. Yeah. Yeah. Yeah.
I tend to agree that the 5s is perfect.
I really do.
If we're in the 5s, that's perfect.
Yeah.
Like we need something that we need to incentivize homeowners to separate from their interest rate and go buy something else. And I think people would be a lot more open to going from like a 2 to a 5 than than like, okay, yeah, I need to move. I mean, sometimes you just need to move. You've outgrown your house. Yes. You want something different.
Oh, we see it all the time.
Things change in life.
Marriage, babies, divorce, downsizing. I need a ranch and not stairs and all the things. If you find that perfect house, buy it.
Yeah.
Yes, absolutely.
And it's a lot easier to wrap your head around that if you're only taking a small jump in rate. But to me that would be the sweet spot to get people out and moving, get buyers buying, and that would give us some good balance.
I do too. You have your young couple moving out from central of town to let's trade with the older couple that needs the ranch they want to buy your house in Chatham for a school district, and all the things, or you have the doctor that was once going here and now he's moving away, and then you have the new one coming in, and or all the, I just feel like I hope we stay as steady as we've been. So I really do. I pray for that for everybody.
I had sometimes like I'm trying to fall asleep and I can't because that's
you worry
the way that I am.
Yeah.
And then I have these thoughts, and this probably isn't even an original thought, but I was like, why isn't there something in place, and why didn't this happen when there were no houses to sell but buyers everywhere, where we allowed people to take their interest rate with them, or at least something close.
I know.
Right? Like that would have been pretty helpful.
So we do have all VA and FHA loans are assumable.
Sure.
All of them can be assumed at the rate. The reason that did not work during that, so going from the 2s.
They can be assumed, meaning that if you have a VA mortgage on your home, another VA buyer can come in and buy your house, right?
Yes, and there's even exceptions
at your rate
for it to not be VA, but yes, VA, let's just say VA to VA, okay, they're coming in at your rate and balance. So here's where we found from the time we went from the 2 to 3s, and even the few years in the future to where we were in the 7s, heck yeah, they wanted your 2 to 3, but you're now trying to sell it for $100,000 more. And our VA buy, like at 100%, they're not, nobody, even conventional buyers, nobody's putting down $100,000.
No.
So like that is just where it didn't work. The difference in what they were trying to sell for versus the loan amount.
And even with that was assumable for the potential buyer. But what about that seller who's got that great rate?
Oh no.
That's like if as a seller,
I know.
Right now, if I could take my rate with me,
you've had some houses you'd even buy.
Right?
Right.
I'd at least have thought about it.
Yeah.
Now I'm just like, right. I mean, and we wouldn't personally. We're staying put for a while, but somebody in my situation, my kids are getting older.
Yeah.
We've got our family house. You know, if they start moving out, my
Yes.
house, we're just going to have multiple craft rooms for Amanda. But
Yes.
a normal person
Yes.
would maybe be like, oh, I could downsize a little bit now, but
Yeah.
I would be a lot more incentivized to do that if I could take my rate with me or something close to it.
Yeah.
And then now here's a nice house on the market for a family to buy.
Yeah.
I just feel like that would open up inventory.
I know. And those same families are out there that want to buy your home. And I don't think we should ever discourage our young kids from buying, because we've true till the end of the day, we've saw that real estate is just such a great investment.
Yes.
It's just the value, even if it goes down a little bit, it tends to come back, in states like Florida and stuff. But even here, it's just steady and true. I mean, I really feel like you can't go wrong with owning a piece of land.
Absolutely
Or
not.
real estate. Yeah.
No, it's a great investment.
Another program, and talking about taking rates with you, I've always wished that they created a program. I feel like you have great cities like Springfield, and we have so many cute like little bungalows or little towns like right downtown. I wish that they had a better program that gave you a little bit towards. So obviously a construction loan, the value has to increase with whatever updates you're going to do.
Yes.
But not every update increases value, and we've spoke about this, me and you, before. But it's okay. That house isn't bad just because it needs a little bit of windows and a roof. And,
Right.
Yes, I probably couldn't do a construction loan because it doesn't increase the value enough, because that's just stuff that needs done. Every house has a roof. Every house has windows, so, but I just wish there was a few houses that I know people would just love if they could just give it a little love,
Oh my gosh.
I know.
We love all of the, the 100-year-old.
Aren't they?
Yeah.
Amazing.
There is so much character in those houses, and it's like, oh, I would love to bring one of these back to life.
Oh, I know. Yeah, it would be so fun. Now,
Right.
the construction loans might work for those, depending on how old and how much you're bringing up the value and stuff. But I feel like we've even our little first time home buyers that don't have a ton of cash to do the updates, but would probably love the crap out of this little $70,000 to $80,000 house.
Yes.
If it just wasn't risky for them to need a new roof in 2 years or need a new, yeah. But here nor there, maybe one day. Yeah.
Well, I'm glad you
Yes.
brought up like first time buyers,
Yeah.
because like something that I know people talk about it, and it's not like it's a hidden secret necessarily, but I don't think enough people know about like grants that are out there for first time buyers.
Yes.
And how beneficial those can be.
Yes. Sensitive right now, only because we are now in 2026. So we actually, and here's the sad part, we actually had a couple grants left over at the end of the year.
Really?
Yeah.
They didn't even get all used up.
No, I mean, it just can be hard. I mean, I would love to see the income limits just a little bit higher, because what they are at, I mean, that is... I'm sure they do struggle to get approved for a mortgage, but the ones that did get approved, sometimes we just had ones where we would submit and they made a little too much money or something
Right.
like that. But
Do you know what the limits are?
so
Top of your head?
Federal Home Loan
Ballpark?
Bank will not even, they're closed completely right now.
Okay.
So they won't even open till the 20th of this month. At that time, we will submit some paperwork, do all our stuff that we always do at the beginning of every year. We should hopefully be able to close around the end of February-ish, but
Okay.
new income limits don't come out till like maybe April or May.
Really?
With like the HUD income limit changes. So yeah, we'll see those. But yeah, February-ish, we'll start to get to reserve some grants. Everyone always has them in the bank. So we do see, just if you're writing a contract, we see a little of a delay because everybody's holding on to, so they get inundated right at first.
Yeah.
Like with all the ones people have been holding on to for the new year. Yeah.
That makes sense.
Yes. Yep.
But especially, and we've gone over this like quite a bit because, Jace, our son, is selling real estate now.
Yeah.
And he's working with a lot of first time buyers, and, and a lot of them just weren't aware of it. There was,
Yeah. Grants.
last year, there was grant money out there for them to get, and people are just like, wait a minute. So I just have this.
Yeah.
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 You can just have it.
Yeah. There is one that you pay back. And we have that available at IMB as well. The Ida, not my favorite, but it has a unique person that I would use it for, and just still feel good about using it for them. And it's a great program. If it's the way to get them into the house, we absolutely have it, and we're happy that we have it. The DPP grant obviously is our favorite, but the $10,000 grant, you don't have to pay back.
That's the best one,
That's
right?
the best one. We love it. Yeah. And we hope that we get to use all of it this year. So
that works normally. Like, the buyer does still have to bring something to the table, right?
$1,000
$1,000
of their own money.
And then,
correct. Yes.
So you put up 1,000 and get
10,000.
10 times that.
Yeah.
And you don't have to pay it back.
Nope.
And
that's awesome.
People need to know that.
Yeah.
Because so much is made about how hard it is for young people to get into home ownership.
It is
these days. And it is very hard to do.
It is. It's expensive to live.
Yeah.
Rents are going up. And that's another reason to buy, because your rent's going up. But then at the same time, that's maybe why they need help with down payment, because of the savings and having some liquid savings and stuff like that. Yes.
And we're running into issues now where, okay, if I'm a young person and I've worked some things out where I've got good credit.
Yeah.
My income's not great, but it's not bad. My debt to income, it qualifies me, but I can get a $100,000 house and get this $10,000 grant money. And it's like, okay, we can go shopping. But where we're running into a problem is a lot of the houses in the $100,000 range have some serious issues to them.
Yes. And that is the only little bit of a bubble, I guess we could say, we've created, is where those $100,000 houses probably weren't always 100, or our 150 houses weren't always, maybe they were our 80 or 90 or whatever. But and I don't know, maybe I'm wrong. I don't have access to MLS, or I know the comps support it because we've sold enough to have comps supporting it. But yes, they need a little love. Yeah.
It's something where, the inspections come back and the house is 100 years old and there's all these things, and the seller doesn't necessarily have the money or the desire to fix them. The buyer,
because the seller was probably also a first-time home buyer,
right?
Yes,
the buyer doesn't have the resources to handle them, and it's like we're seeing a lot of these deals where it's like it's so.
I know.
It's just like deflating, because
it's almost a little bit heartbreaking.
Yeah.
Yeah. It's just because it could just be a great home, and yes. I hope we, have some handy people, or people that buy them and love them, or try to flip them and rent them maybe, or, whatever the case may be.
Something, get them in better shape. Yeah.
Yes.
Flip them right, please. Don't just slap some white paint and gray floors in there and call it flipped.
Yes. The reason they almost need to rent them for a little bit is so that because if you try to flip, then you're trying to make your money back that you've put into it. Well, that defeats the purpose of buying it at the 100th, or having a first time. I don't know. Maybe. I don't know.
Yeah.
Talk circles around real estate sometimes. Yeah. Yes.
Yeah. That's what a lot of this is.
Yes.
And then now we have the issues with the, the Fannie and Freddie oversight stuff, where even with conventional financing, you guys have to,
appraisal. We talked about that a lot. Yeah. Gosh, that's been a while too. The podcast appraisals. Yes, we were the AI now. All the things. If things are tagged, definitely watch your Illinois real property disclosures and what your sellers are kind of writing on those.
And that's, by law, we have to slide that over to them and say, fill this out. I can't do this.
Yes. I had, there's always the sweet little ladies. You can tell too by their handwriting. They're adorable. That they just fill out. And I think that they just want to tell you all about the house, on it.
Yes.
Yes.
Yes. Yeah. The floor creaks upstairs when you walk through the hallway.
Yeah, that's what I mean. So there are things where, yes, please be honest if the basement, I guess gets a little water during a heavy rain or something like that. But, oh man, I had one the other day. I think I don't even know if she wanted to sell quite, but she just wanted to tell us all about the house and every little floorboard. And
right. And these don't necessarily qualify as disclosures, but thank you. We appreciate the information.
Yes. Yeah.
But there are things now, and then it's the pictures from the appraisal, and things are certainly not getting easier or less complicated.
No,
there are more and more hurdles that pop up, and for all of us to work through together.
Yeah. Yes.
And And so all we can do is just kind of educate our people on the front end. Hey, just so you know, we might run into this.
Yep.
And this is what we need to do when that happens.
And kind of know the best way to, structure it, or how paperwork should be, or just different things. Yeah. Yep. I agree.
Are there any, is there any out there, we've talked about the first time home buyer, like grant stuff, the incentives to get people into the housing market. There's nothing like that for people who have already owned a home, right?
Right. Yeah. We typically see, so when we were going big time through where people would buy without selling, obviously non-contingent offers, right? A lot of gifts if they could get it, which I know is even hard for the parents, right?
Sure.
It's just expensive to live. 401k, retirement withdrawals, those kind of things. Again, just getting real creative with that. Like where, how are we going to make this work? Do we need to save? Sometimes you get pre-approved with me purely just to see like, hey, what's my savings goal so that I can buy, and how are we looking at that? So yeah, we'll see.
Yeah. I guess we're just always kind of like racking our brains trying to figure out how to get more people able to buy houses.
Yeah.
And it's tough. But
I'm shocked. I didn't mean to interrupt.
No, you're fine.
How many people still think they need 20% down though, if they've already owned a home?
Okay. This is great. I'm glad you brought this up. Go right ahead.
Yeah. So they don't, obviously 5% minimum. And then the coolest thing about IMB is that if you are waiting to sell, you can give me a big chunk later and we can always modify that payment. It's a unique feature that we offer. And that is very important to people, but they just in the beginning though, we only need the 5% if you've already owned a home, as little as 3% if you're a first time home buyer and don't qualify for the grant, which can be actually, you think about that, 200,000, 3%, $6,000 plus some closing
as little
costs.
as 3% for a first time buyer who doesn't qualify.
Yeah. For the grant.
That's for a conventional.
Yeah. Yes.
Really?
Yeah. Conventional wanted to become competitive with FHA's down payment several years back, and it's been, I think, amazing. Yes. So we could really just get them let them know what their savings goal is. Even tax return time's coming up. That's an amazing thing to save for.
There's your 3% right there.
Exactly.
Potentially.
Yes.
So that makes it so if you don't qualify for the grant money, and there are income limits.
Correct.
And so I guess the school of thought is, well, if you make this much money, you should be able to save enough to put down some money, which I understand.
License,
But that's great. I don't even know that I knew it went. I knew you could lock in at 5%. I didn't know you could lock in at 3% for a conventional.
Yeah, 5% when you have already owned a home.
Wow.
Yes.
Okay.
Yes.
Okay. And then same thing though, the PMI is attached to it until you hit 20%.
Yeah, and I want people to can sometimes be scary. They're like, well, I don't want to not put down 20% because I have that extra insurance and whatever. But that is not just your standard yucky $250 a month or $200 a month. It's based off credit score, debt to income ratio. A lot of things go into it. I have people buying very large homes and their PMI could be as little as $50 a month or
really
$90. Yeah, so it's tiered based on certain aspects of. Now they take a lot of things into consideration.
Oh, good. I've always wondered about that. Like, how does that number get calculated?
Yes.
There's just certain things I know it's there, but I don't know.
Yeah. Yeah. They look at it all.
Okay.
Yeah.
So there are variables that contribute to how much that mortgage insurance is.
Yes.
And it falls off.
Yeah.
Like that's what I always tell people when they're looking at, well, I could go FHA, I could go conventional. I could, I'm always like, well, if you go conventional at under 20%, that PMI falls off.
Well, I even had a kid.
FHA, it's there. Yeah. It's always there.
I say it is the whole life of the loan.
But
our goal is to refinance out of it. Life of the loan. But a buyer by just 2.5 years with me. He was in the one of my higher rate guys, and we refinanced. Value went up enough. We dropped PMI. Yeah.
Perfect.
I know. It was wonderful. Yeah.
What a great day.
Yes. And actually I had another one they refinanced with me and it dropped, their credit score was a little bit when they first bought, but that mortgage payment helped improve it. So it dropped from the higher PMI rate down to like $40 a month. Yeah.
Oh, see?
Yeah. So it was, and then the FHA, of course, we'd always love to refinance you out of that PMI eventually, so into a conventional loan. Yeah.
Right. Yeah. A lot of people just get, they buy a house and, their payment's their payment, and then they go on about their life, and they don't think to maybe revisit to see if they could improve
all of it.
That, like, yeah. So, every couple of years, call Natalie.
Yeah. I mean,
just to see.
I have people all the time reach out and say, hey, what's rates doing? I kind of heard a little thing in the news, and I'll be like, actually, you're at a great rate. Really can't go anywhere right now, and say, okay, keep me in mind. I even can keep you in mind, like add you a list or follow up with you. Yeah. So would love to kind of watch those for you. We keep a list of our pipeline, knowing that some people they're going to get to that point where it's necessary for them to refinance. We actually will reach out and say, hey, you really need to refinance. So,
I mean,
yeah.
that goes against that's a great thing. For one, that's why, I mean, we have our mortgage. I work with Natalie. That's and why I send more people through. It's
good that
it goes against your overall profit margin to do that as a bank, right? Like, really.
But we would much rather be able to do the right thing first and foremost, do the right thing, but watch after our customers who we've created relationships with, adore, and then we would rather be the one taking care of you than you to find out that they've dropped and you went somewhere else to do it. Yes. I mean, so you're doing the right thing and you're retaining that relationship with people you already like to work with. So yeah,
that's why I can't stress enough, like, how much better off you are more likely to be going through a local lender who's part of the community.
Oh yes, we love it here. Yeah, we all do. Everyone, we're like I said, I really do think I'm really hoping we stay steady. I really think that we have a great area we all live in and all do business in.
I think that we will, for whatever reason. And I got licensed 2013, started selling in 2014, and so 12 years. It's been steady. Now there's been better times, but and even Mike Busher says all the time, he's like, those of us who went through like the crash in the
07, 08,
right?
Yeah,
like, we're still in business.
Yeah,
like, it's you're gonna go through some rough times, and it's kind of like, there are those markers and things, and now we've got the COVID marker.
Yeah.
The timeline marker.
Yes.
Well, ever since COVID.
Yeah, we brought it up at the very beginning.
Yeah.
Yeah, we've kind of had this weird market since COVID, and we'll probably always gauge things based on that. Yeah.
And that people are I think people just want things immediately to happen. They don't understand that, especially something like the housing market, where we have this event, we have the rate drops, and then, like we were talking about, we still had people when rates were up like close to 8% that were still
buying.
Yeah, buying and bidding house prices up.
Yes.
Still, and it's like, we are still in the wake of what happened here. It's not, these things aren't like push a button and it changes. Push a button and
I know. Well, and I think that everyone, if they could kind of think a little bit, I think if anyone from 18 years old till even me, like social media, you're scrolling Facebook, TikTok, Instagram, all the things, and you see these people are like, I made millions off of investment properties, Airbnbs, all those people do not care what rates are. Their biggest thing is monthly payment. For them, it's cash flow, right? Whatever they can make off of it. But for you, your cash flow is your monthly budget. So if you love the home, you want to be a homeowner, it's less than what you pay in rent. Or maybe the same, or hey, it's $200 more, but it has a fence for my dog. Yeah. Whatever the case may be, it's really all about that month. I would really focus on the monthly payment for now, and then we'll, figure out the rest. Yeah.
That's everything.
Yeah.
I know before I was in real estate, we bought the house we're in now, but the first place we went into to talk about getting a mortgage got us a nice pre-approval.
Yeah.
And we didn't know any better.
Yeah.
So we were out shopping for houses we should not have been shopping for.
Yeah.
On a sod layer and a home daycare income.
Yes.
And we're shopping for these houses, and we found one we really, really liked. And I remember I went into this person's office and said, "Hey, here's the house we really like." And I thought to, thankfully, say,
"What's the payment?
What would our payment look like?" I mean, I know we're pre-approved.
Yeah,
it was under what we were pre-approved for. And this person ran some numbers and wrote this number on a piece of paper, and I was like, like,
Amanda, we're going shopping
Yeah.
again. Yeah.
Like, oh, man, that
Yeah.
am I paying bi-monthly?
Yeah.
Because there's no way.
I know.
So we had to significantly adjust
Yeah.
what we were looking for. But that was such a learning moment for me that I've been able to take with me throughout my entire career, because I went through it buying a house where I saw a number, got really excited.
Yep.
And I didn't realize we could have wrote an offer on that house.
Agreed. Absolutely could have, and closed and been pre-approved. And really everyone's budget's different. We'll have people that payment's fine to them, because what we don't know is that they have like a friend moving in or a significant other, or you have two people making the exact same amount and one is 2 kids in daycare, or, maybe they have different habits or going out to eat or, whatever. And then this person, works all night shift, never gets to go out to eat, has no kids,
Right.
So it's just, totally different.
People's lifestyles are different.
Budget is everything.
Right.
Your budget, you just tell the realtor that you spoke to me or that you're happy with it. And yeah.
Yeah. No, that's so important.
Yeah.
We just had we call it Coffee and Questions, our weekly company meeting here. And what they talked about today, they had some title people in to talk about, what's the name of it? Finza, something. I don't know. And it's people buying properties, residential properties, cash, but as an LLC or through a trust.
Okay.
Now have to do a lot more on the front end, have to fill out like a 9-page thing verifying all their funds and where they came from. It's an effort to combat fraud and
business fraud, maybe.
Yeah, I mean, and laundering.
Sure.
Yeah.
Yeah. Okay.
And so, I know for me,
I didn't know that. So that's
right.
New. You just taught me something today.
So
is this a new thing for
this
2026?
Is brand new.
Wow. Just went into effect.
Yeah, and
wow.
they don't even have all the documents yet to see what they even look like. So
I bet our commercial lenders have been spoken to about that. Yes. Yeah.
Well, and I think there's something where it's only residential. It's a weird kind of thing. But what you may end up seeing on, in your field, are people to get around this, just borrowing a little bit of money to get a mortgage on a property.
You can't close in the name of an LLC with Fannie and Freddie and you close in your actual names.
Okay. What about a trust?
You can close in your trust. Correct. So they would have to, but they always provide the trust documents, which you've probably even had that with a client before. The LLCs, we see those a lot with our investors, and those are typically with our commercial department, even if it's at a residential home, like they're buying a rental or something.
Well, it's rentals and stuff too, though, right?
Right,
so it's
correct.
not just, this isn't just for people buying just houses for themselves. It's for up to 4 family dwellings or something.
Okay.
So
yeah.
If you're buying anything like that cash without any sort of financing, you have to.
You said cash, yes.
Yeah,
yes,
right.
Yes,
you have to fill out this thing where you show where all of your money came from and put all your bank information in there.
Yeah.
And so to get around that, we were all just kind of talking this morning, to get around that, you could potentially go to just
put a loan on it,
get a loan on it, and
then they would
close,
and
then just pay off.
And they would have the same, we have the Good Funds Act, we have where we have to verify every dime in your account, every deposit. So that doesn't help them too much with the loan. We see more people not wanting to pay cash completely for a property because they don't realize that, let's say they found another rental and they're wanting to do a cash out refi, get some cash back out to purchase a new one. In my world, in the Fannie Freddie guideline world, you have to wait so long to do that. Yes, you can't just do that immediately. Yeah.
Your world sounds tough.
Yours too.
Yeah, I know. That's why we all kind of have to work together.
Yes.
There's so much that goes into it. And that's one of the reasons that I joined this affiliates committee.
To do something fun and not.
Well, I wasn't even thinking about the fun part. I value the connections I've made with everybody around this industry so much.
Yeah.
Right? And
title appraisal. Yeah.
And one thing nobody ever, really taught me or told me, and it's just something that almost goes unspoken, is how much we as realtors need you, and we need inspectors and we need contractors.
Yes.
We need people at title company. We need these people to do our jobs like efficiently. We have to have all of these people that we lean on, and because we are kind of like the first person, we're the first line of but when people are buying a house, it's everything goes through us, it feels like. And then you're like, well, do you have a lender I can talk to? What about a home? Do you have
a plumber, an electrician?
And so we need to have, I need to know. And one of my favorite things about you is I need to know when I call Natalie, she's either picking up or she's calling me right back. And that, right. And so I've got a short list of people and all these, and I was like, these affiliates, these relationships are so important.
They are. Yeah.
And we all have to work together.
I agree. From a person at a title company, because you got this lien from a company that's not even open anymore.
Right. Right.
I mean, I don't think people realize the dots you connect to get a loan to closing.
No.
Yes.
No, they sure don't.
Yeah.
And it literally is such a team effort.
It is. Yeah.
To just get to one closing table.
Yeah. I agree.
And so when I saw that this committee existed, I was like, oh yeah, I'm gonna jump on that one because I don't know,
it's a good one,
right?
Yeah. Yes.
Right. So are you going to be here at this event?
Yeah, I'll be there.
I just put you on the spot.
No, I'll be there.
Okay.
We used to stand, and I was there last year. We usually they have IMB at the front table because we hand out wine glasses.
Okay.
To go around and get your wine. So now I think as of yesterday, I don't know, Brad, I'm sorry if this is not right. He was going to reach out because now we need different glasses. We need all the glasses, so not just wine glasses. I'm sure we could all drink any drink out of any glass, but it's fine. I mean, but
it's a classy event.
Yeah, it's a classy event.
This will be my first one.
Oh yeah.
Yeah.
Yeah. So it'll be good. And all the affiliates will be there. They have wonderful treats and different things and information to give you at each one of their little things. And
I'm excited.
Yeah.
I was talking to my wife right before this. She's always got ideas. She's like, ooh, here are some things you could ask Natalie.
I love her.
Yeah, she's amazing. She said, ask her for a buyer who's thinking about buying a house. Like, even if it's next year, we're thinking, how soon should they call you? At what point should they reach out?
I wish the urgency was anytime they're ready. Like they could technically, if they're not looking until next year, they can call me right now. So I can say, hey, you make too much for the grant. So this is how much we need to save. This is what we're looking at, and that way, let's say they get to their goal quicker and they find something, maybe they passed up on a house they didn't even know they could have bought, or maybe they're even ready now and they don't even realize it because so many people get scared of rejection.
I'm so glad that you said that.
Yes, they do. They think that they don't. Well, I just don't know. I doubt I can do this. And before you know it, they're my strongest buyer that I have. They're the one. I was like, what are you talking about? You don't think you can? I was like, can you give some of your savings away then to my next buyer?
Yeah.
Yes. Yeah.
I think I'm going to get T-shirts made that say "Have the conversation."
Just do
because
it.
that's something I find myself saying all the time.
Yeah.
I mean, not just about. They're like, well, I'm thinking about buying. Maybe I don't know if I could get. I don't know. I don't know. I've got some stuff. I don't know if I could even get. And I just always say, have the conversation.
Agreed. Well, I had a realtor send me somebody that even told her, I don't think my credit's ready. Right. So we looked at it. She only had 3 tiny things. Like she could have taken care of everything with $1,000. And she's like, oh, well, I could do that this month.
Right.
And I said, well, in a few months, your score should reflect it. And I told her how reporting takes a little bit. Anyways, but because she was willing to have the conversation, she wasn't scared for me to take a look at it and at least let me tell her. And I could even give her phone numbers off the credit report to call. It just made it easier. And so now, yes, we might not buy for a year, but she could be a potential future buyer. Yeah. Yeah. So,
and if she doesn't have an agent, just have her call me.
Yeah.
I'll take care of it.
Yes.
But no, it's like that part, and it applies to this. It applies to, everything in these transactions. Sometimes you're scared to ask the other side for something, and it's just have the conversation.
Agreed.
Make the phone call.
Yes.
It's not going to hurt. It's just do it. I don't know if well, I can tell you 100% it's a no if you don't have the conversation.
Well, and then it can be the opposite where they're like, well, what if I don't buy? And I'm like, then that's okay. I mean, like, then the letter, it doesn't go anywhere. You know, it doesn't like produce something, you know,
Right.
so it just gives you answers so that you know if you want to do something.
I have people all the time who don't want to go and get their pre-approval because they don't think, you know, like, yeah, we want to look, but it might take me longer than 60 days to find a house. And I don't want to have to, how long do pre-approvals last?
Well, I always tell my clients that as long as your income and your debts remain the same, it's probably going to be perfectly fine to continue. Technically, your credit report expires every 120 days, approximately every 4 months.
Every 4 months.
Yes.
Okay.
But in that 4 month time frame, I'm not just going out and saying, "Oh, ding, it expired."
Right.
I'm pulling your credit. One, I cannot do that without permission. Two, really, we don't probably have a reason to do it unless you're continuing to actively look, or you're saying, "Oh my gosh, Natalie, my car broke down. I did have to go buy a new car. Can you relook at my pre-approval?" Absolutely. It's probably a good thing we re-pull credit if it expires, you know,
Sure.
and do those things and relook at some numbers. But if maybe your savings has increased or you've paid off something, I don't have to necessarily ding the credit for it to probably take a quick look at it again in 4 months or whatever.
And I tell people because they, you know, well, if I get it now, what if we don't find? Then I've got to start from scratch and start all over again and go and get pre-approved again. And I always go,
it's not pre-approved again. It's just updating something or taking a look again. It's not.
It's updating.
Yes.
And that's what I try to tell them. It's not like that. You're not starting from scratch.
No.
If you go get pre-approved now, it's like they want to find something first and then get pre-approved.
But then what if I notice
that.
something and now we've had 4 months to work on it instead?
Right.
Yes.
Right.
Yeah.
So that's just one of the reasons we tell people no, pre-approved now.
Yeah.
And then we'll start looking at houses, and if we don't find anything for a couple months,
Yeah. Yes.
you know, then it's more of an update, not a start from scratch, just
Agreed.
to make sure we're still.
Yeah.
Yeah. So.
Or you'll even have the people who'll get pre-approved and will be like, "Dang it, I really found this house for $250." And I said, "Well, if you think you're going to look in that price range, if you paid off this one small thing, or if you did this," so it's not even the savings. Sometimes it's just like it just taking a look at certain things. So yeah.
All right. What do you got going on rest of the day here? Anything pressing? Good for you.
I know.
Relax.
Oh, yeah, right.
Go take a nap or something.
Oh my gosh, I wish. See how many emails and text messages I got while I was in here. Go back to the office. Yeah.
Well, your phone dinged right when we started, so
yours probably had a few.
Yep. Yeah, I've got a few over there too. It happens. That's okay.
Yeah.
We've got our very last Christmas is Friday. I mean, not ever, but we've got multiple celebrations.
Yes. So I have to sometimes push them back.
Yeah.
We have one Saturday.
Do you?
Our last one. Yeah.
All right.
Yep.
Was that all good though? I mean, everything was I mean, I think we're like 5 down, 1 to go.
Ugh.
Crazy.
Kind of happy.
Chaotic.
Yes. Happy for the new year. Yeah. I'm ready for Saturday. Yeah.
Me too.
Yes.
Me too.
Yeah.
Well, thank you so much.
Yeah. Thanks for having me.
coming back on.
Yeah.
This is,
I love it.
I want to make this a kind of a regular occurrence.
Always
for
things
you,
changing. Yes.
to kind of keep everybody up to speed on what's going on in your world.
Yeah.
If that's okay.
Of course. And then if anything.
I just signed you up for that without asking.
No, I love it. I can even shoot you updates if we see things changing with guidelines and rates or different things, maybe even give you something to shout out on the podcast.
Please
if you
do.
need to. Yeah.
Please
of course.
do. You've got to do your job before I do mine.
Yeah.
So
Of
it
course.
kind of works out like that. So
Okay.
all right.
Well, hopefully I see you before February.
I agree.
Yeah.
I agree. I don't know. Maybe we might.
Yeah.
We'll go grab lunch or something. Just catch up. I need to send you some buyers. I probably need to get some business going this year. I need to sell things in 2026 too.
We're not doing so hot for the year.
Yeah, we just started.
I know it's the one time you can say that.
Natalie, thank you so much for coming on. We'll talk to you soon.
Thank you.